Markets plummet aggressively as Donald Trump announces a 25% tariff on steel and aluminum. Ethereum accumulation addresses have reached a new all-time high in inflows at what seems like a catastrophic moment. At the same time, Ethereum ETF is seeing a significant capital inflow, while retail whale wallets continue to accumulate Ethereum. So why is XRP's open interest dropping right now? We explain it in this video. Lately, we've been seeing headlines about Donald Trump announcing tariffs on Mexico and Canada. He threatens from the left, he threatens from the right. One of his latest threats is imposing a 25% tariff on steel and aluminum, which he has just put in place. And what's striking is that he stated the White House would impose reciprocal tariffs on countries that tax the import of American products. In other words, he sets the rules, he's in charge, and if you try to resist, he'll make it even worse. That's the message Donald Trump is sending to the world. And these kinds of announcements impact financial markets. We already saw how Trump's first tariff announcement caused a sharp downward move. Now, with this latest announcement, we've seen another decline. Less intense this time, but once again, it's an attempt to shake things up. Remember that the previous drop was driven by the initial announcement and the fear it triggered in the markets due to the emergence of. In essence, from that first DeepSeek-driven dip, we had already pointed out in our videos that this was just another phase of fear spreading through financial markets. And the market's immediate reaction, almost a perfect V-shaped recovery, seemed like a clear statement of intent. Of course, the US later reignited fears with additional tariff measures, but prices eventually corrected. And now, yet again, we wake up to another tariff announcement from Donald Trump. But as you can see, prices are already bouncing back. Could this be a phase of absorption, where bearish attacks are starting to weaken? Why not? Our message remains the same. We stay positive in both the crypto and traditional markets, as long as the S&P 500 holds above $5,864. That's why we've been saying there's no black swan event, neither from DeepSeek nor from these tariff announcements. If things change in the future, we'll see it clearly on the charts. But for now, there's no reason to be bearish. So let's consider this trio of consecutive attacks as an institutional opportunity to absorb retail fear and selling pressure. And of course, we can apply this to the crypto market as well. As you know, crypto has been falling lately in the same way as traditional markets. It's just a way of saying it. Of course, crypto is much more volatile, and percentage-wise, the drop has been far steeper. That's just the reality. But fundamentally, both markets have moved in sync. If we take a step back and look at Ethereum's price action, we can see how this recent sharp drop, which we had already been analyzing at the time, you surely remember, stood out because of its volume and clearly bearish delta. The wick on the daily time frame was striking, and it made sense to expect the price to continue a slow decline. That's why we started to consider the possibility of institutional absorption. These were just theories at first, but thanks to blockchain analysis, we can actually confirm them. Now, let me explain what we're seeing in this chart, because it provides crucial information to understand the current crypto landscape and what we can expect for Bitcoin's price in the short, medium, and long term. I'll break it down for you, but first.
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
We're looking at addresses that are solely dedicated to accumulating the asset, specifically analyzing their inflows, Ethereum in this case. In other words, when Ethereum enters these wallets designed for accumulation. Now, it might be a bit tricky to spot, but take a look at the histogram below. It shows when these addresses receive significant capital inflows. These are wallets meant for large-scale accumulation. And notice how, in the past few days, we've hit a historic record of capital entering these addresses. Remember, we just looked at Ethereum's chart. We saw how Ethereum has experienced a sharp, aggressive decline. And in Crypto Insight videos, we discussed how this looks exactly like institutional absorption during a major drop. And now we're witnessing a record-breaking influx of Ethereum into whale wallets designed for accumulation. A historic record. Now, stop and think about this for a moment. At a time when prices are dropping aggressively, really aggressively, when there's widespread fear and panic, when the average retail investor believes that DeepSeek has triggered a black swan event, that traditional markets are shaking, that everything is about to collapse, that tariffs are coming, damn, it's enough to scare anyone. Take all of this, put it in a bag, and slap a label on it that says extreme fear. That's what's being sold to us. But at the same time, we can see how major whales are entering Ethereum at historic volume levels. In this environment of chaos, fear, DeepSeek, tariffs, markets are falling, watch out. But at the same time, we analyze the volume. We interpret absorption. And now we have data from these wallets that help confirm the hypotheses we've been working with. In this case, we're not talking about historic inflows, But now we're looking at the net inflow of the Ethereum spot ETF. And we see that liquidity is currently entering the traditional market through Ethereum ETF. Basically, they're using the regulated infrastructure of traditional financial markets to buy Ethereum through an investment vehicle, which in this case is an ETF. And here, not just in the crypto market, but also in traditional markets, another pathway to Ethereum, we see a very similar behavior at a time when Ethereum is falling, along with the entire crypto market, but especially Ethereum, in a severe, sharp drop driven by fear. We see that institutions within the Ethereum spot ETF seem to be gearing up for quite a party. Now, in this crypto quant chart, we're also going to study Ethereum accumulation, but this time we'll focus on retail investors. After all, retail investors are also part of this market, part of this bigger picture. Let's first look at this purple section representing the accumulation of retail investor addresses. And here, we can already see a small upward trend starting to form. The Ethereum balance in retail addresses is increasing right now. And if we analyze the balance of accounts holding between 10,000 and 100,000 ETH, we can see that this upward trend has already been developing for some time. But even if we focus strictly on the short term, which is what really matters right now, we also observe an increase in accumulation at this moment of fear and panic. Now, let me remind you of the bigger picture. Look at Ethereum on this daily chart. It has been falling aggressively since January, and especially in the past week, we've seen this sharp downward momentum, and right now we're witnessing all of this behavior unfolding. Now, does this necessarily mean that the price is going to make a U-turn overnight, and tomorrow we'll see the market in green, hitting all-time highs? Because I can already picture some smart guy thinking that. The answer, of course, is no. This could take time. It could drag on. If the price feels like it, it can take its sweet time, even pulling off structural traps before making a move. Just imagine how long that process could be. Honestly, we don't know exactly how or when it will happen, but we're starting to see the kind of information that really matters. Now, something else that stands out is what's happening with an asset with financial health that most would envy. But interestingly, if we analyze XRP open interests, we'll see that traders' exposure to XRP has clearly decreased. Right now, fewer investors are exposed to the XRP market. The usual interpretation, the one you'll often see online, is that if open interest drops, it must mean institutions aren't buying and therefore the price can't go up. In my opinion, that's a completely flawed take. It makes no sense to believe that Ethereum is being accumulated while XRP, which has followed a similar pattern with some volatility just last week, has just had a major momentum event that held up in a key defense zone. That's why there's no reason to be bearish on crypto right now. Ethereum and XRP should move somewhat in sync, and those traditional narratives we keep seeing don't quite add up. The conventional investor's take would be wrong here. From our experience, institutions don't like it when retail investors tag along while they accumulate, waiting for a future price surge. They want to make their move alone. That's why it makes sense to see open interest decreasing, so that in the medium to long term, the asset can eventually rise. Institutions are deliberately creating this setup because if retail investors are buying alongside them, once the price moves up and they see profits, they'll start selling. That selling pressure injects market supply, making it harder for institutions to achieve the bullish direction they've been carefully building over weeks of accumulation. Anyway, I hope that makes sense. If it does, let me know in the comments. And if you enjoyed this advanced technical analysis, hit the like button, subscribe to the channel, and click the notification bell so YouTube lets you know when I post future content. Also, share this analysis with your friends and with other trading and crypto communities. Good luck with your trades and see you next time. Subscribe.